Good afternoon. Welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is Friday the 19th for the weekly wrap-up. Let's turn right over to the Fire Tip trading platform, see where we closed off the day here. Looks like corn for September delivery trading up 3 cents with December contract trading unchanged. We got soybeans for September trading up 9 3/4 with November trading up 8 1/4. Wheat in Chicago up 4, and we got Kansas City wheat trading up 3. Seemed like, for the most part, a pretty quiet day in Chicago. Yeah. What are traders thinking about going into the weekend?
Yeah, you know, Cody, fundamentally, not a lot of new news to report on out today. We did have a reported export sale to China of SRW wheat for the 2013-14 crop year. That was a sale of 120,000 metric tons, and it seemed to support the market a little bit. But one thing in the wheat market in particular that's been catching some attention just in the last couple of days has been actually missed sales by the U.S. market. Yesterday, we know the Egyptian sale, the majority of that went to Black Sea markets, and we saw that again today. A big South Korean tender went to Black Sea markets as well there. So I think that's going to be a developing story here in the weeks to come. As we know, we have seen pretty good U.S. sales so far, but I think that right now, certainly that Black Sea wheat is priced substantially lower than what we're seeing here right now, about $40 a ton, and I think that's going to start to reflect or be reflected within the U.S. market. Turning our attention to corn and soybeans here today, we did get some numbers out from Planalytics late in the trade session, and I thought that there were some interesting numbers there. Basically, Planalytics takes a look at greenness right now and relates that to historically, what does that mean for final USDA yield for corn and soybeans? Looking at those numbers right now, Planalytics is expecting the USDA to need to take off 2 bushels per acre for soybeans and 4 bushels per acre for corn in those final reports.
Yeah, and you know, those reports are very detailed. They actually go down on a state-by-state basis. So just to remind you guys out there, the grain hedge trading clients do get access to these reports when they come out. And so if you are a trading client out there and you want to see this on a state-by-state basis and really dig into the details of this report, and I would recommend it highly, you can give us a call at 877-472-4607, or you can send us an email over here. Visit us on Grain Hedge. Take a demo if you'd like to see the report as well.
Right.
Logan, is this Planalytics report, you know, it's very interesting. They are coming in below the USDA expectations for yield. Is this a market-moving report?
You know, I don't think it is. I think the thing really to use it for is for moving forward here as we get later into the season. We know last year we saw the USDA, certainly at this time of year, we know things were very dry, and we saw Planalytics start to give some indications that there were going to need to be quite substantial yield revisions made by the USDA. So in today's report, we did see a pretty big deviation between what the USDA currently has projected and what Planalytics thinks that the USDA is going to need to do here as we move through the growing season. So I guess bottom line, I don't think we're going to see the market pop on Sunday night as a result of this, but I do think that here, specifically over the next 3 to 4 weeks, is really the time to keep an eye on it and keep it in the back of your mind that right now, you know, according to historical levels, historical greenness, the USDA is going to need to take a little bit off yield here by October.
Yeah, and I think that's definitely something that you guys should look into if you're interested in learning more about the NDVI index and the model that they've developed over there. It's very powerful. Now, one thing to keep in mind here before we wrap up this show is the cash market, and the cash market has been very volatile in the past few weeks. You know, we've obviously seen soybeans take a serious digger here.
Right.
You know, soybean basis has dropped significantly. This week, it only dropped 4 cents on average across the U.S., but it's something that you got to keep in mind as we go into the next few weeks. We are coming up on the first notice day of that August contract, and right now we're seeing some major players still bidding at plus 100 off of that August contract. I think that leaves a lot of room for basis to really implode here and really drive lower. So just keep in mind out there that there's a possibility that soybean basis could really start to move lower pretty rapidly in the coming weeks as we get toward that August contract. Now, one other thing too is corn basis. Now, we don't have an August contract there, so convergence isn't so much a problem. That basis for corn has actually improved by 9 cents on average across the U.S., and that was mostly driven by very strong ethanol bids. We saw some ethanol plants increase their basis by 20 to 30 cents. A lot of it on average was up, I think, 12 cents for most of these ethanol plants across the U.S. So we saw very strong basis in the corn market, you know, very tight stocks, and of course, without that convergence problem, I think it gives a lot of room for it to continue continue improving.
Yeah, so certainly this week, kind of in general, it seems like not a lot of movement in the futures market in particular, but certainly a lot of activity going on in the cash market. If you guys have questions or need help navigating your local cash market, feel free to give us a call here at GrainHedge. Our number is 877-472-4607. In general, that's kind of what we saw here for the week in the grain market. Thanks a lot for joining us. Have a great weekend. We'll see you back here on Monday.